Hello everyone, it's me the Boss Hog. We're back with another portfolio update as of the week ending the 26th of January, and hopefully with our volume sorted as well. It got a bit messed up over Christmas when I was travelling. I have been seeing the comments, and hopefully this is sounding a lot better without blasting your ears away. There's some big news as well in that we've been able to complete our target for the year of maxing out 2 ISAs 2 months early. This is our number one financial goal, so to me it's a pretty big deal. And you can see here I've just grabbed the screenshots from my brokerage, Trading 212, and it looks really good. I do think it's maybe worth explaining, considering I've now got 4 years worth of maxed out ISAs, and you might say, well, hang on, the profit in one is about 6,000, the profit in the other is about 13,000, right? How comes you got 25,000 profit? And really, the reason for that is for anyone who's newish. In the early days of having an ISA, I didn't realize, but I was pinging money between my personal ISA and my general investment account. And I didn't realize that I couldn't take money in and out so easily. So what I effectively did is reduce the amount that I could contribute to my personal ISA in the first year as a result of that. So there is a little bit of a mismatch there that you just have to trust me on over time. And since then, we've just been paying directly into our ISAs and not transferring any money out of our ISAs. Again, that was just me being a bit of a novice at the time, but I thought that was worth explaining, seeing as you guys don't normally see this, and there might be a question mark there about the reconciliation or indeed the profit number. That aside, however, let's look at what we've been buying, selling, and indeed depositing in order to max out our ISAs, as well as how the markets have been performing. But as a teaser, it was a pretty calm and steady week in which we added about 5 grand to our profit. So let's do it now. Okay, so in terms of transactions, we're going to start with deposits, which were 48.50, a very specific amount, and that's because that amount exactly rounds off my wife's ISA. Now, originally this wasn't my plan. I was just going to put in, 2.4k for February and March and complete it for the end of the year. But since Trading 212 introduced its, 5% cash, and it's tax-free, it pretty much is about the same as I could get elsewhere. So I thought to myself, well, it's much of a muchness, and I can put it in there now and complete it and, talk about it and have that achievement of completing it a couple of months early. Even shared the news with my wife because she knows it's such an important financial target for us to hit, and we're all very happy with it. So 5% tax-free whilst it sort of sits in the account and I just average in on a daily basis. I thought it was an okay thing to do, so we were in a position to do so near the end of the month, and that's exactly what we did. So that's the rationale there. And what I'm then doing is in each of the ISAs is I'm spending £100 a day just buying and dollar cost averaging or pound averaging over time. And again, that's a very emotionless and kind of easy way to invest. So that's what we're going with, and we're going to be doing that it's going to take about a year and a half, by the way, to unwind these cash amounts that I've currently got sitting in my account, assuming that, we continue hitting 20,000 a year, and because we're also going to be having a sort of run rate of dividends coming in as well. So, when you run the numbers, it's going to take us about 17 months in order for these to fully unwind. But again, I'm absolutely okay sitting on a little bit of cash, and if the market does crash, then we'll reconsider. But for now, with the market looking relatively expensive, I would say, then we're in no rush, and we're okay to collect our 5%, which gets paid on a daily basis, and actually it's pretty nice just to see a pound coming in each day. Feels good. Outside of that, we had one dividend this week, which was on my S&P small cap 600 holding. It's pretty interesting, this one. It's been varying sizes over the last few months. It's been as high as 100 shares and as low as 1. So getting a dividend here for 43 shares actually feels pretty okay. I think at the moment I've got 73 shares in this. We actually done a little bit of swing trading quite nicely, in which I sold down quite a big chunk of my position at $88, and now we've been rebuying it in the low 80s as well. So no buys in that, in fairness, this week, but previously we were buying. So timed that quite nicely. I then decided to sell out of my position in Augmentum for about an 8% profit. I haven't been in it for very long, and I just decided that it's kind of one of those things I flirted with. I thought it was kind of fun to have, a bit of FinTech. But if I'm honest, I haven't really found the time or the enthusiasm to properly get stuck into its holdings. And I decided, whilst a few things were having a pretty poor start to the week, that I would sell, take a modest profit for 2 months worth of work, inverted commas, and sell it. So we'll keep an eye on this to see if it would have made me some money. But honestly, I'm fine with it. I bought it thinking that I would have the time and the energy to get stuck into some interesting companies, but I just haven't. And realistically, I don't expect to find the time anytime soon. So that was my thinking there. Then we've got a bunch of buys here. Now, in fairness, because I was busy on Friday, I didn't actually have time to average in on the final day. So actually, there's a bit of a shortfall here once you run the numbers and account for the fintechs, the Augmentum fintech, which can be just reinvested, was my decision there, and then spending £100 a day. So I've got a bit of a shortfall, about £250. So what I'll do is on Monday next week, I'll probably just queue that up to buy on Monday morning. And then we'll get back into it. So next week the plan is to buy 1246.87, and then that will catch us up basically. So again, I don't strictly have to do that, but I wanted to, and I'm going to try and keep up with the averaging in. So part of the reason why I decided to sell Augmentum, if I then move on to the buys, was because the global mining ETF that I have here had a little bit of a difficult week and has had one or two difficult weeks with sort of some of the mining updates and the worries about China. And I didn't time it perfectly, so I didn't get to enjoy all of the run up this week in the latter half of it, after sort of China announced some stimulus packaging and maybe some of the results from economies were better than expected. But for me, it's a great opportunity for me to buy a lot more shares. This is now a fairly large position for me. And we're down about 2%, but honestly, I feel absolutely fine. And we're just using it as an opportunity to continue to average in, basically. So that's definitely been a big focus for me. A couple of other focuses here are my emerging market small caps. So again, this is turning into at least a mid-sized position now. Both small caps and emerging markets are a focus for me this year, just because I want to round out my portfolio, and I also believe that they have opportunities to outperform. So we're definitely targeting this. Another market we're interested in is starting to grow our Indian focused fund. Now, originally I was a bit apprehensive about this because it always seems very expensive, but when I started to look into it and looked at the NAV, I generally started to feel a bit more bullish about it in general. So we're averaging up here actually, just because it's been doing so well. We've never had a particularly huge position in this fund, but we'll continue buying it and follow it up. I will sort of look to buy a much bigger stake on any kind of weakness, but for now we're just going to sort of average up and grin and bear it. Then we've got our global infrastructure. I'm about even on this, to be honest. Dividend here isn't too far away, so we'll enjoy that when it comes. My thinking here is that basically there'll be a lot of focus in economies to sort of get themselves back up and running again. I still don't fully buy into the idea that the world economy has put everything behind it. I think there's still a lot of sort of things to work through the systems. I also sort of wonder if in the long term, governments will have to find jobs for people, frankly, and infrastructure is going to be a good bet on where they're going to be. And similarly as well, I think a lot of infrastructure has been put off for too long. So my bet here is in the long term, infrastructure always seems like a way that governments will find money to spend on, basically. Then we got some more emerging markets here. So again, we're continuing to average into this. Pretty flat on this at the moment, but more than happy buying at this price point. Then we've got Canada. I'm only buying Canada and indeed the Netherlands when it's red. The Netherlands had a pretty great week, or the ETF did, because of ASML primarily, which we'll get on more to in a second. But Canada didn't have such a great week, so we're buying. But again, when I say it's down here, it's very marginal, just like a couple of, I don't even think 1% for Canada specifically. And then lastly, where we're putting our interest is in this this holding. So this is almost a fun play for me, so that I can see over time how much money I'm actually making from the interest on my account. At the moment, there needs to be a bit of a catch-up, just because I've had more interest in the size of my holding here. But you'll continue to see fairly small buys on this. I'm looking to buy at least once a week. I would have topped up on Friday if I'd have had time to buy. But not only are we actually going to be growing this from the interest we're receiving from Trading 212, I've made some banking changes over the last couple of months, just sort of like opening up some savings accounts, moving to accounts that offer better cashback. What we can get in the UK is nothing as good, frankly, as some of the stuff I've seen in the US, but still I do expect to make about £500 a year or so from these things. and it's effectively free money. So when we start to receive interest and cashback and things like that from the end of January, we'll also add that money into here as well. So that would be a nice way for me to sort of reward myself mentally for doing a bit of admin as well as the interest here as well. So by keeping it a separate holding that I'm only going to put that kind of stuff into, I'm hoping over time it's going to be like pretty eyebrow raising as we go into hundreds and eventually thousands, maybe even tens of thousands. And that would be awesome to see that grow over time. So that's what I've been doing this week. Not super exciting buys, I would say, just sort of trusting the process and averaging in, and obviously betting relatively big on global mining here. Everything else is sort of just aligned with my medium-term outlook in terms of what I think I might be able to outperform. So that's that. Let's have a look at my performance from my holdings. Okay, so usual start here in terms of our overall portfolio value. You can see on almost 10k week on week increase. That was split almost equally between the deposit, right, almost 5k, and then the performance. And you can sort of see the performance there as well and the profit improvement. So closer to 4k in fairness, but broadly speaking, those two numbers make up for the change. You'll also see as well that I was finally able to work out what I needed to do in order to factor my cash deposit into this, which isn't something I've had to do before. I basically just went back in time and sort of adjusted for the cash balance as it was at the time, and that now seems to have resolved itself. So I'll keep an eye on this just to make sure it washes through in the right way, but that now looks pretty good from that perspective. If we then go back up to the top and work our way down, so a couple of updates then outside of anything we've talked about. In terms of the realised P&L from my Augmentum sale here, this is the change week on week. So £95, so again, not a huge amount, but we still take that from a very little work. We also had that £18 dividend that we spoke about for the S&P 600 small caps, so great. Then a couple of numbers up here as well. We don't always touch on this because they don't tend to change that quickly, but first of all, we have now hit our ISA target of 40k. It's our plan and has been our plan for like 3 years / 4 tax years in order to hit this. So it's just very important if we want to retire early and retire well, which is what we'd like to do. We're currently holding 6% of our portfolio value in cash. Again, we don't have any targets or numbers here or anything else outside of what I've already touched on. So this is pretty high at the moment. I did consider sort of going heavy into some of my convictions, and then I was like, nope, we're just going to trust the process. We're going to do £100 a day in each ISA. That works out $1,000 a week, and we're going to be happy with that. So that's what we're sticking with. This figure here is our cash interest. So this is just literally a quick check on my brokerages, each login, and over time this will be what we are putting into our position that we're putting all of our interest into, as well as again any interest that we're receiving from our banks as well. So that's the plan there. Pretty close alignment this week. I'm happy with the reconciliation, so no need to touch on that any further. And yeah, broadly speaking here, looks pretty great. I think this is also quite nice to see though in terms of the net deposit, and again the net deposit over a rolling 52-week period should, broadly speaking, look about 40k. Sometimes it might be slightly more, right? Like if we compare potentially in February, it might be slightly different just for sort of year end and sort of bringing deposits forward. I don't always deposit super regularly, right, including this week. But over any sort of rolling period, we would always expect this to be about 40k because of our target and basically maxing out our target as a result. But some of these will be quite interesting as they develop, like the dividends, for example, here are a rolling year figure of £3,000, so it will be that'll be pretty exciting. In terms of our time weighted performance here, which again I've mentioned before and I'll mention again, is my most important graph. It kind of tells me whether the work I'm doing is worthwhile or not. Sadly, the S&P has pulled further ahead in January. It's really just on fire still, but we're doing okay. We're definitely being held back at the moment by the performance of the FTSE. We still have a fair amount of our weighting in UK stocks, so that's definitely been challenging. It's also been pretty, so even some of our US stocks have been quite volatile. Some of them have been doing quite well, others of them have had quite significant pullbacks. But broadly speaking, considering how January started, and I was down about 4.5% in a week at the start of January, we're more or less flat for January, so much better than the FTSE, but much worse than the S&P. Also as well, aided by our pretty sizable deposit, our portfolio is now at an all-time high, so that's awesome. Just to be clear as well in terms of the thumbnail, so the thumbnail relates to my ISA and my wife's ISA, And then we've also got this general investment account as well. I am hoping to transfer that into my ISA in the not too distant future. But for now, it remains outside of it, kind of as an emergency fund. But again, for anyone who's been following me for a little while, we're in the process of building a proper emergency fund. And once that's in place, then I'll consider moving this into the ISA. For now, it remains a kind of fairly blunt emergency fund as we get our proper emergency fund up and running. But we will leave it there. It's just literally my position in Games Workshop. That's the only holding in my general investment account. Outside of that, we're not quite at an all-time high from a profit perspective. Earlier on Friday, it was very close. It was like £30 behind, and then it sort of fell back at the end of the day. But you can see here, compared to early January, it's had a pretty decent climb, and similarly as well, portfolio value over time, that looks pretty great. Interestingly, not a ton of overall big movements this week. When comparing week on week, but honestly the start and the end of the week felt quite different for a number of stocks. So Scottish Mortgage honestly had a pretty volatile week, and that's because it was having both its companies were performing both really good. So if I look at the likes of ASML, which is now its largest holding, had a pretty fantastic earnings, I would say. And you can see just down here, that was the best performer that we had as a standalone stock. So my opinion, by the way, on ASML was almost that their guidance was overly pessimistic. I kind of get why they're doing it. That, I mean, they were quite honest about it. They weren't 100% sure where the semi cycle was at, and they also weren't 100% sure on exactly the impact that any geopolitics was going to have on them in terms of, sales to China primarily. But I did feel like the fact that they didn't raise their guidance was a little bit of sandbagging and a little bit conservative. However, the market still seemed to love the results. A big fat backlog of orders. And I mean, I still think it's a really impressive company operating well. So it's really good. And ASML, not only do I have this £3,000 position here, it's, by extension of my holding in Scottish Mortgage, I have another like £2,000 in Scottish Mortgage. And then I have a bit more position in my semi ETF, a bit more in my Dutch ETF. So I want to say that ASML is my most commonly held stock across all of my funds. Is pretty interesting the way that's going to be. But honestly, I'm very happy with that position just because I rate the company and I think it's doing a great thing. So that's awesome from my perspective. Outside of that, I would say I have no idea at all why Genius had a pretty good week. It just seemed to rise up. I feel like at this kind of level, I've spoken before, I think 6.5 is about fair value for where it is at the moment. We're going to be keeping an eye on their earnings across the next couple of quarters, especially as they're due to start becoming profitable. So we'll start to see what that looks like. Overall, the business, I believe, is due to be profitable later this year, and then the US side of their business due to be profitable next year. So we've been very happy with Genius for the last 2 years now. They had an investor day 2 years ago. I really liked what I heard, and since then they've continued to meet or exceed their projections. So this to me is a maturing management team who's doing exactly what they're saying, and I think it's being rewarded. They did go as high as about $8 6 months ago, which I thought was a bit crazy, and that was off reasonable, good earnings update, but that was after market, and then when the market opened, it sort of went back down again. So I definitely thought $8 was getting ahead of itself. But we're pretty happy with this kind of price point for Genius. Again, I have no real idea why it ran up this week. I did have a little dig, but we couldn't find anything. And speaking of dig, again, mining here up 4%. So we were only able to take advantage of about 1% and a bit of this. We did a lot of our buying in the latter half of the week, sadly, when it had already had a bit of a jump from the China stimulus hopes. But again, we're more than happy buying at this price point for the long haul here. And then, ASML is probably the only other stock that had a major movement. You can see here, I highlight this either red or green if it's more or 5% each way. Elixir is a very small position that has had a bit of a recovery, but it's very small, and I haven't got much to add on that point, frankly. So not a ton to add outside of that. So maybe we'll leave this video nice and short because, honestly, I haven't got too much to add. Augmentum will fall off next week. Huntsman was removed this week, having been sold previously, so we'll take Augmentum off, and then we'll be down another stock basically as well. So I think that's all I have for today. Let's keep it nice and simple and short. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.